Hey guys, B Twice here. Today is Sunday, August 15th. I had a request to go back over CrowdStrike. So this is just a quick update. If you want to see kind of how we got to where we got with a bigger count leading up to this peak, you could go back and watch the previous videos on CrowdStrike. But we're just going to kind of go over where we stand within this correction, and we'll look at the bull count and the bear count. So quickly going over the bull count, we had a three-wave move to the downside for a W. We had three-wave move back up for our X, and now we've put in an ABC move to the downside, taking us to a wave Y bottom. So the bulls see this as a wave Y bottom. Now it is right between the 100% and the 161.8% extension, which is very common to find your wave Y bottoms, or your wave Y extension. And that would be that this means that we'd already have our wave 4 bottom, that the wave 4 bottom was set last week, and that we're on the move up for a wave 1. So it could still go a little bit higher, but we're looking for a wave 1 now, and then ultimately we'll pull back for a 2. We'll see a 3, 4, 5. So if the bull count is correct, we should see an impulse taking us back up to close to all-time highs, and then we get a slight pullback and then ultimately rally from there. We're going to be looking for 290 a share or somewhere in that ballpark for our actual wave 5 peak. But obviously, we would be seeing a series of impulses taking us up to that level. So we're not just going to go straight there. Obviously, we'd see a lot of 1, 2, 3, 4, 5, and then a pullback, and then another five-wave move, a little bit of a pullback, and then another five-wave move, and then that would take us up to our wave 5 price target of somewhere between 290 to 300. Now, I still do think this is a buy zone between the 100 to 161.8% extension. I believe this is a good buy zone for at least a three-wave move to the upside off crowd, especially for long-term holders. So that's the bull count. The bull count says that wave 4 bottom is already in. All right, so now let's go over the bear count. So let's look at this correction. So the bear count is the exact same. The difference is that when we had our three wave to the downside, it just takes us to a higher degree W, and then we're going to pop back up for an X, and then we're going to flush one more time. So the bears are saying, hey, no, the bottom's not in. Yeah, you're still going to get a three wave to the upside. It's going to be an A, a B. We're going to rally some more probably next week into the 250 range, but somewhere in this 250 range, maybe 255, somewhere in this ballpark, it's going to get rejected. It's going to sell off again, and it's going to flush, and it's going to flush even lower, and it's going to take you to the 161.8, which could potentially be right on this trend line. And that's why I was saying this is a buy zone for long-time shareholders, right? Like, because between 242 and 226, if we're going to get a rally out of there to take us up to the 290 range, anywhere in there is a good buy zone. Now, I would make sure I'm using a stop loss of either this trend line or of the 161.8% extension, because if we do break the 161.8 extension, that could potentially mean that this wasn't a 3 and this wasn't a 4, that this was actually a 5. So you want to be smart around here, but I do think that anywhere within this range is a buy zone. Um, with that being said, it's just going to, I think the state of the markets is really what's going to drive whether or not this bottom was already set, because right now growth stocks have been selling off. Growth stocks need to catch support if we and have a huge rally if we want to see CrowdStrike going back to all-time highs. Or it could be that maybe they have blowout earnings at the end of this month. So maybe we get a rally that keeps us somewhere in this range, and then they have blowout earnings, which takes us up to that 290 window. That's pretty much anybody's guess. But right now we're in this middle area where it could go either way. It could be that we've already set our bottom and that we're working on an impulse to the upside that's going to take us to all-time highs, or it could be that we just get a rally followed by a deeper sell-off. But anywhere within this window, I definitely still think is a buy. And the closer you can get to the 161.8 and the closer you can get to that trend line support, the higher probability you have to get into a profitable trade and get yourself into a spot where it's risk-free and you can move up your stop loss so that if it does ultimately sell off, then you can get out. So a lot of times the reason you want to buy these three swings, just to kind of quickly go over this, is look what happened. We had an A, B, C move, and we had a huge flush for our C. This was a great buy on this move down here, because when this happened, now we're already popping to the upside. So anybody who got in below the 161.8 has already been able to kind of move up their stop loss a little bit. So now it looks like we're coming back to retest it. So it really needs to hold it. But if you were to set your stop loss there and we go a little bit lower Monday, then you've got out and you've lost nothing. Um, so that's why a lot of times it's a higher probability to get in on a 3, 7, or 11 swing. All right, guys, if you like these videos, go ahead, hit a like and subscribe.